there is another examination question which has been asked a few times in CA final. Interesting one. Let's read. What are the consequences of the amount deposited in the capital gain accounts scheme to avail exemption is not utilized? Question number 1. Sub-question. Is there any difference in the tax treatment in the event of term of an assessee before the stipulated time? Two questions, two different extreme questions. Let's have a look. So there is we all know there are exemptions given in capital gains chapter under section 54 plus 54B, 54F kind. So these exemptions prescribe that asset has to be acquired. Capital asset transfer, new capital asset should be acquired. If there is a problem in, or if there is a difficulty in acquiring the new asset, the said amount can be deposited in the capital gains accounts scheme. The question is related to that. Question number 1 or A in that. What are the consequences if it is not utilized? Amount lying in the capital gains accounts scheme not utilized, what will happen? Simple. Capital gains accounts scheme is an intermediate solution. It is not possible for you to buy an asset, buy a property quickly. So deposit the money in a capital gains accounts scheme, utilize the money and then complete the transaction. In this case, the capital gains accounts scheme, money lying in the account has not been utilized. What will happen? Simple. It will be taxable either as long-term capital gain or short-term capital gain in the year in which the unexpired or in which the utilization threshold period is expiring. Normally, capital gains accounts scheme, we have to utilize that within 3 years, 2 years, something like that, which is given in the main section. If it is not utilized within the stipulated period, simple, it will be taxable as either long-term capital gain or short-term capital gain as the case may be, and in the year in which the period is expiring. That's the answer you should give for question number A. Question number B, second question. The amount is deposited in the capital gains accounts scheme by Mr. A. The period, unutilized period, I mean to say the period is, let us say 2-3 years, whatever it is. In this intermittent period, A died. What will happen? Very interesting question. I think how examiner thought about this question and asked it in the examination. Very interesting. There was a death in the hands of the assessee, death of the assessee. Meaning, in the first part we discussed the unutilized amount will be taxable. Whether the unutilized amount, will it be taxable in case if there is a death of the assessee? Answer is no. In case if there is a death of the assessee, it will not be taxed in the hands of the assessee, nor in the hands of the legal heir. There is a CBDT circular specifically mentioning this position. So, which says that, which has been issued in 2016 if I am not wrong, which says that it is not taxable in the hands of the assessee who had died, nor in the hands of the legal heir. Two interesting questions. Take care of this. Please be careful on the second part where you have to give a reference to the CBDT circular. Thank you.